Good afternoon, everyone. I hope you all are doing well, and of course, you are studying for your examination. So good to see you again. Not exactly you can see me, of course, but good to interact with you all again. Once again, I am C. Ankit Sharma, your income tax faculty for this PGBP revisionary class. I hope most of you knows me because already the PGBP normal class, the normal live lecture also has been taken by me. So I believe that you all must have gone through with the provisions of PGBP. As we all know that PGBP is a very, very, very important chapter in our daily life also, and for examination purpose also it is utmost important. When I say this is most important chapter, that does not mean that other chapters are not that much important. Everything is important, but why it is most important? Because the first question, the compulsory question, generally have a large component related with PGBP provisions. So whether it's a question of calculation of GTI or calculation of total income or calculation of tax, so generally it is framed with the provision of PGBP because it consists of multiple provisions so that an examiner can actually find out that whether that student has go through with all the provisions related to this chapter, because this chapter has maximum provisions from section 28 till section 43b and 43c, etc. So multiple provisions are there and they are interconnected also. As I when taught this class in the live classes, we have complete this chapter. I told you at that time also that most of the student thinks that this is a difficult chapter. But in my opinion, in comparison with capital gains, salary, and PGBP, I think PGBP is easiest one. Because maximum thing we are familiar with, the terminology, what we are using in this chapter is the only chapter. So we can relate with this chapter. That we know the meaning of depreciation, etc. And there is a process of solving that question. In that process, I believe that 40% process is very, very, very simple. And for the purpose of step marking also, this chapter has a very unique characteristic that you could attain, you could get the marks on the basis of steps you have taken correctly or steps you have solved correctly. In other chapters like salary, if your basic salary is not correct, so that means it might be that you are not going to get good marks in that question because due to basic salary wrong calculation, your gratuity, leave encashment, HRA, provident fund, and other things calculation will also be automatically wrong. Same in case of house property, if GAV has not been calculated correctly, then maximum things will be wrong in that solution part, and so on as capital gain also. If the sale consideration is not correct, if the cost of acquisition is incorrect or the indexation is incorrect, in also those cases, you would not be able to get good marks on the basis of step marking because these are the starting steps. And if you are going to solve wrong calculation of basic salary, GAV, or sale consideration or cost, so you're not might going to get good marks on the basis of step marking. But under PGBP, it's very good because we are multiple things to add back and deduct. So that each addition or each subtraction could be provided step marking, and that could be easily, you could get easily 60 to 70% marks in a PGBP question, or might be you are going to get full marks also if you are able to solve the additional condition which must have been given in a question. So in today's session, we will complete some MCQ, and the provision, those are related with those MCQ. We will discuss them simultaneously. Then we will solve RTP question, MTP question, last year question suggested with suggested answer prescribed by the institute. So that might help you to recall all the provisions once again with this special chapter, that is profit and gains of business and profession. Before starting the MCQ part, Look, we are not going to discuss the provision of this chapter in detail because that has been already discussed in the normal class. So if you have any query related to those provisions, so you can go through with the normal class, and you can easily going to understand the provision because we have discussed all the illustration and test your knowledge questions also in the live classes in detail. Each and every question has been discussed by me. So we are not going to discuss illustration, which has been already discussed. We are not going to discuss the test your knowledge question that has already been discussed. If you have any problem in those questions, so kindly watch the previous lectures, which has been already on the YouTube portal in detail. So we will discuss something what we have not discussed in earlier class because there must be something new for you. So that will make worth of this class what institute actually is providing you for the purpose of examination preparations. Fine. So let's start with the concept or with the structure of question which might be going to ask in an examination. So under PGBP head, I personally think that there could be two kind of question in your examination paper. So types of question which might be going to ask you in the examinations. It could be either it could be a small question or short question that is called individual question. So there could be short questions also related with this topic. Those are individual question based upon some individual section, which might be between 2 to 3 marks or maximum 4 marks. Like there could be a question regarding depreciation and additional depreciation. So in that situation, there would not be a PGBP, a P&L account would not be given, but there must be information regarding the asset, etc. On the basis of those information, you might be asked to calculate the depreciation or additional depreciation. Right? So no other provision except the depreciation is going to affect it. Or there might be a question related to scientific research expenditures. So we have provision for scientific research, whether it has been commenced before, it has been done before commencement of business or after commencement of business. So we have separate provision for that also in section 35. So there could be a 2, 3 or 4 marks question regarding the scientific research provisions. There could be a question on the section 35 AD specified business provision also. The deduction which has been allowed to specified business under section 35D except for land, goodwill, etc. So that could be also a separate question. I'm not saying that these topics could only be asked as a separate question. These could be a part of normal long question also, but that could also be going to be asked in simple format of a 2, 3 marks question also. Then we have TDS provision also. So they might give you 3 or 4 transactions and they might ask you in those transactions how much deduction will be allowed. If TDS has been deducted or not deducted, on due date, before due date, after due date, etc. etc. So we have multiple provision regarding it on which separate question could be framed. It could be for a preliminary expenditure also could be asked. Section 35D. So there could be a question regarding preliminary expenditure that is also could be asked to you, or section 36. They have multiple provision regarding bad debts, etc. So that could be a 5 or 6 point question in which they could ask whether in these cases deduction would be allowed or not. Whether section 36 plus or that could merge with some cases section 43B or section 37(1), etc. So I'm just trying to tell you that what kind of question you might interact in the examination, or you need to understand that what kind of question could be framed. So there could be two kind of question. One could be an individual separate question which is connected to a single provision of the PGBP head, or it could be correlated with 1 or 2 provision of the PGBP head. So these kind of question could be framed in the examination. And the other kind of question could be long question, which could have marks 6 to 10 marks. And that could be a full profit and loss account could be asked. Under these 2 and 3 marks question, one more topic is very important, and that is partnership firm. I've seen that in the previous examination, 3-4 marks question regarding to a partnership firm has been asked. In that you have to recall the provision regarding remuneration allowed under section 40B, interest to partner allowed under section 40B with the maximum amount, which is 12%, and we have to calculate the remuneration as per the book profit. So there has been a specific format to find out the book profit, and on the basis of that, we will find out the maximum allowable remuneration as per income tax. And then we need to compare that remuneration as per accounting remuneration. And the lower would be allowed as allowable remuneration. So a partnership question could also be asked separately. And now we are talking about the long question. So there could be a long question having 6 to 10 marks, and that could be a long question and might be going to ask you with a separate or to just find it out the net profit or PGBP income. So there would be a detailed trading and profit and loss account would be there, and they might ask you to find out the net profit as per the income tax. So at that question, there could be a requirement to only calculate the PGBP income, or there could be a question that is going to ask calculate the PGBP income out of these information and total income also. So in that case, you have to calculate the PGBP income, then other heads income, it could be other source income also in that question, house property income could be there, capital gain income could be there, and then after that you will find out the GTI, and then there could be deduction, and then you need to ask to calculate the total income. So that is also possible that they might ask you to calculate under section 115 BAC or also under optional tax regime. So that kind of question also be there, but I prefer, in my opinion, if there is a compulsory question is going to be asked, and if it is related with the PGBP part, so that would be like this: PGBP calculation, total income calculation, and tax calculation also. And tax calculation as per section 115 BAC as well as normal case also, and with application of AMT provision also. So that could be a kind of question I believe could be asked as a compulsory question. So in that you have to find out PGBP income and total income and tax also under section 115 BAC and normal provision with the applicability of AMT, what we have discussed in the chapter number 9, that is calculation of tax and total tax liability. So you can see that PGBP, and this is certain that in your tax law income tax part, PGBP is going to be asked at least for 10 to 15 marks in every attempt. Generally, it happens that the PGBP portion, whether it's theoretical part, whether it's numerical part, whether it's short question, whether it's long question, but it would be at least 10 to 15 marks part should be related to PGBP head. Even if there is this kind of question is there, and suppose it is for 12 marks or 10 marks or 8 marks. So whatever marks it carry, in my opinion, 60% part should be related to the PGBP provision, and the balance is for other income and calculation of tax liability. Clear? So you have to prepare to that you are going to encounter these kind of question for related to PGBP in your examination. Moving ahead, the format or the PGBP. Under PGBP questions, there would be two format information may be given. Whether that PGBP income should be related to a business, and if it is a business, then there would be a profit and loss account. Trading and profit and loss account must be given. in which we all know there would be sale, closing stock, and there would be opening stock, then purchase, then direct expenses, then might be we have GP, then after that we have GP over here, then we have expenditure of P&L, salary, depreciation, bad debts, provision, conveyance expenditure, advertisement expenditure, etc., etc. And then we would have a net profit, and that net profit must be according to the accounting provision. And we all know that if this kind of information has been given in the question, these kind of information, if given in the question, then how we need to solve it, I have already explained in detail in our normal live classes, that we will take this net profit, which has been as per accounting provision, and then we need to add back or subtract the information, the allowed expenditure, the disallowed expenditure, the allowed income and disallowed income. And after those allowance and disallowances, and after solving the additional information which might have given after this profit and loss account, etc., after applying the provisions for all these concepts, we will drive our net profit, that is as per income tax. And that would be called a PGPP. So if there is a trading and profit and loss account given, we have to apply this method to find out the correct profit, etc. Clear? Now, what if there is a profession information has been given? In case of profession, we have been given, there will be information regarding a receipt and payment account. That would be given in the question. And receipt and payment account generally on cash system of accounting. So whatever cash or bank has been received, that is going to be shown over here, whether it's related to revenue or capital, does not matter. Both would be the part of our receipt and payment. And whatever cash or via bank we have made payments, whether that payments related to our revenue expenditure or capital expenditure or for personal purpose, does not matter. That would be part of our receipt and payment account. So if the receipt and payment account has been given, in that situation, we're taking the balance CD and add or subtract the thing. We will not do that. Just a second. So we are not going to follow that concept in this case. In case of there is a professional information has been given, in that case, we will draft a new income and expenditure account. Clear? Income and expenditure account. And when we form a new income and expenditure account, in that case, we will only consider the revenue related items. All the capital expenditure is going to be removed from it. Only revenue and those expenditure or income which is connected to our business directly or indirectly will form part of our income and expenditure account. And whatever surplus we will receive at the end, that would be our net profit, or that would be our PGBP income. So that we have already had discussed in detail in the live virtual classes. And you might have been gone through with all the provisions, what we have discussed over there. Now, what is the meaning of business? We have already discussed, and we have a definition of section 28, which explains the meaning of business. And in a summary, we can say, if there is any income directly, indirectly, from the business activity to carry on any business activity or for not carrying on even any business activity, that would form part of our PGBP income. Om Krishnan Gupta is saying, sir, please take a quick revision of the PGBP and then question. Okay, we can go for PGBP provision in a quick session with the help of our diagrams only. Because if we gone through with the provision one by one, theoretical provision, then it would be really difficult to solve the MCQs in detail with you, to solve the RTP, MTP, other important question what we have not discussed in the normal classes. So I will take the provisions as per the help of the diagram which I have been uploaded initially also. I will upload them again. One by one you can see there are provisions. I have made all the provisions in the chart formation. So that would be really easy to revise the provision instantly. So let's revise some provision and then we can go for the MCQ part. So the first section, the section 28, which talks about the charging section of PGBP, section 28, and it says, any income directly, indirectly arise due to business to carry on or even for not carrying on any business. So even if there are any income for not carrying on any business, that will also form part of PGBP. So when there could be income which is for not carry on business activity, that we have already discussed in the detail in the virtual classes, live classes, detailed classes. So that was if I am getting some amount for not using any patent, copyright, trademark, etc. So that amount what I am receiving for not carrying out or not using those patent, trademark, copyright would form part of my business income. Clear? Now section 30 and 31, which is regarding for the expenditure to be claimed for building and plant and machinery. So it's a very simple provision. It says if there is revenue expenditure, then it would be debited to P&L account. And if you are going to incur any capital expenditure, that would eligible to claim the depreciation. Section 30 and 31 deals with it. The very important section is depreciation. And of course, if there is a PGBP question, a detailed PGBP question, so there must be provision relating to depreciation. You cannot ignore depreciation provision. It will form part of every PGBP question. So it says, what is the meaning of block of asset? We already discussed what is the meaning of block of asset. The asset those having same depreciation rate will form in a single block. Once an asset come into the block, its individual identity ceased. So once an asset comes into the block, so it would be treated as a single asset. It could not be treated as an individual asset. It would be treated as a single asset. To claim the depreciation, it's a very important point. Please remember it, everyone. To claim the depreciation, the value and the asset both must exist in the block of asset. So if there is a block of asset having 10 asset in that block, and we can only claim the depreciation on that block of asset if at the end of the year there are some asset or even one asset should be at least in the block and there should be some value. So we need both value and asset. Both must exist to claim the depreciation. If there is value but no asset remaining in that block, we cannot claim the depreciation and also vice versa. Clear? Now to claim the depreciation, the chart says there could be two situations. Purchased in previous year, that means asset purchased in previous year. Only on those assets we can claim the depreciation if those are purchased in previous year. And condition number one, either they not put to use in that previous year. So it would be a circumstances that you purchased an asset in a previous year and not put to use. So if asset has been purchased in a previous year but not put to use, in that case, depreciation in previous year will be 0%. So there must be some use, put to use for business, mandatory, if you want to claim the depreciation. And what would happen in subsequent year? So even if not put to use in subsequent year, there would be no depreciation, and if put to use in subsequent year, then full rate of depreciation could be claimed. Suppose the DAP rate is 15%, then if subsequent year it has been used even for 1 day, then full depreciation rate could be claimed like 15%. So it will happen when asset purchased in previous year and not put to use in that year. What if purchased in previous year and exactly put to use in the same previous year? In that case, we have two situations. If it has been put to use for less than 180 days in that previous year, then half rate of depreciation will be claimed. And if it's more than equal to 180 days, then full rate of depreciation will be claimed. In subsequent year, always full rate of depreciation has been claimed if asset put to use. It does not matter it is used in 1 day or 2 day. In subsequent year, there is a universal provision. If it has been put to use, depreciation with full rate could be claimed. The format for claiming the depreciation already has been mentioned over here. Now the provision, the short provisions for section 35, and that is preliminary expenditure. So if you are going to start a business, in that situation, if any expenditure which has been incurred before incorporation or registration of that business, those are called preliminary expenditure. This deduction is allowed to only resident Indian company and all the resident assets. So a non-resident and a foreign company cannot claim this deduction. In case of company, if you are a company, then 1/5 of lower can be claimed as deduction, that is actual expenditure, or 5% of higher. Capital employed or cost of project. So capital employed or cost of project value would be compared. The higher value, 5%, would be taken over here. That is going to be compared with the actual expenditure, and out of the lower value, 1/5 can claim as an expenditure deduction under PGBP. For other than a company, the same provision will apply, but there would be only actual expenditure or 5% of cost of project, because there is no capital employed involved. What are the meaning of actual expenditure? That has been given over here. We have already discussed those expenditure in detail. The meaning of capital employed and the cost of project also has been explained. Now section 35, which is for scientific research expenditure. It says if you are commence any business which needs scientific research for some kind of innovation, invention, then if the expenditure has been incurred before commencement of business, then within 3 years, any expenditure on revenue would be allowed as deduction, or any expenditure on capital nature within 3 years would be allowed as a deduction. In case of capital expenditure, except land, the expenditure should be approved and related, and for revenue expenditure, only material and salary expenditure will be considered. Any expenditure which has been incurred before 3 years would be irrelevant. Only within 3 year expenditure value would be considered. If own research has been done by yourself, 100% allowed. If it is a social science research, 100% allowed. From a private company, approved college, university, 100% expenditure would be allowed. After commencement of business, revenue expenditure all allowed except land. And if you are outsourcing those expenditure, then again the same provision, 100% deduction could be claimed for those expenditure. So those were the provision regarding Section 30, 31, Section 32, Section 35D and Section 35. Okay. So there could be a separate question also related with depreciation, related with Section 35D and Section 35 also. The next chart describing provision regarding multiple section. Chart 2 says there are certain expenses like general expenses which cover the Section 36. Like family planning expenditure would be allowed only to a company. Unabsorbed depreciation would be allowed till infinity year. Any income except salary and casual, you can claim the unabsorbed depreciation out of those any income except the salary and casual income. Insurance policy expenditure, if it is scheme and insurance policy, it is allowed. Other general insurance policy allowed. Mediclaim policy for employee, and if paid by check, then also allowed. Then we have a provision regarding contribution for approved funds. So if there is an employee contribution, the treatment is under Section 36, what we are going through. If that is a employer contribution, the treatment under Section 43B. We have discussed this in detail. If that is an employee contribution, that contribution should be deposited by the employer up to due date of that fund. In that case, deduction will be allowed. And if the employer is not able to deduct it and deposited that expenditure up to due date of fund, or if he deposit after due date of fund, in that case, deduction would be less. In case of employer contribution, the provision says you can deduct or deposit it up to the due date of ROI, then deduction could be allowed in the same previous year. And if it is after, then deduction will be allowed in the year deducted and deposited. Payment for CSR activities are disallowed under income tax. Okay. No reserve and provision for bad debts allowed. All reserves and provisions are disallowed except a gratuity reserve. That would be discussed Section 43P. All expenditure allowed if all conditions below is fulfilled as per Section 37. It should not a personal expenditure. It should not a capital expenditure. If it is a capital expenditure, then depreciation will be allowed only for business purpose. Payment to political party disallowed. Income tax is disallowed. In case of indirect tax, only penalties disallowed. STT, CTT is allowed if security is your stock in trade. Penalty for violation of law is disallowed. Okay. Then there's a very interesting section 40, that is very important. That is regarding expenditure allowed, but those are connected with the TDS payment. So for that purpose, point number 3 deals with Section 40 regarding TDS provision. The point number 1 says any salary and interest to proprietor and member of individual HUF, AUP, etc. is disallowed. Generally disallowed. Salary and interest paid to partner is allowed up to 40B. That is going to be discussed in firm provision. Then the concept of TDS says, it is very important, this one, that if any payment made to non-resident, so if I'm a businessman and I'm making payment to the payee and the supposed payee is non-resident. So if I'm making some payment to a non-resident, then it would be either salary payment to him or other than salary. So if payment of salary done by me to a non-resident, then TDS on that salary should be deducted and deposited up to due date of TDS. So if I am able to deduct the TDS and able to deposit it up to due date of TDS, then that salary will be allowed as a deduction. And if it is not done, then deduction of salary will be less. Clear? Other than salary payment, the provisions are relaxed. If it is deducted and deposited up to due date of ROI, then allowed in same previous year, otherwise allowed in the year in which deducted and deposited. So it would not lapse if you deduct and deposit later. You could get the deduction in that year. If the payment has been made to a resident in India, then the provisions are same whether it's for salary payment or other. It says if deducted and deposited up to due date of ROI, then full expenditure allowed. Otherwise, 70% would be allowed in this year and 30% would be allowed in the year in which it would be deducted and deposited. If that is a person resident outside India, then for salary purpose, non-resident concept will be applicable, and for other payment, this resident India concept will be applicable. So for salary purpose, if not deducted, deposited up to due date of TDS, deduction would not allow. And for other purpose, if up to due date of ROI, deduction allowed. If not, then even 70% would be allowed. Section 40A says, disallowance of expenditure under certain circumstances. So if you paid any expenditure, if you incurred any expenditure and payment has been made to a relative, then if the payment is excess the FMV, then that excess would be disallowed. Any payment to any person same day. If you made any payment, revenue or capital does not matter. Same person, same day. Exceeding 10,000 in cash or exceeding 35,000 if the payee is a transporter, then full amount is going to be disallowed, whether in cash or bearer check. No reserve provision allowed except gratuity reserve or provision has been allowed. Any contribution, staff welfare fund disallowed if not genuine. Section 43B talks about deduction allowed on payment basis. So these deductions will be allowed only if the amount has been paid up to due date of ROI. If it has been paid up to due date of ROI, deduction would be claimed in same year. And if it is not so, deduction would be claimed in the year amount has been paid. Just same like TDS provision. So what are those payment? First one, employer contribution, which is related to this provision is 43B over here, what we have discussed over. So the provision under section 43B, it is regarding this. Employer contribution, any indirect taxes, cess, fees, government would be allowed only if you have paid it. Bonus or commission, interest to any bank, leave encashment, payment to railway, interest on loan from cooperative bank, etc. Any sum payable to micro or small enterprises beyond limit. So in this case, deduction would be allowed only if that has been paid up to due date of ROI. If it is not, then deduction could not be claimed. Up to point number 6, this concept has been applicable. Clear? So those were the other expenses provision. Now part B is presumptive taxation scheme. That we will discuss later. Before that, first of all, these provisions need to be discussed. Additional depreciation, very interesting and again very important provision also. So this is only allowed except it is additional depreciation. So whatever depreciation you are eligible to claim, you can claim. But if you are able to fulfill the condition of these provisions, so you could also claim an additional depreciation. So it says this is only allowed to the manufacturer. Asset should be new plant and machinery except ship and aircraft, second hand, used in office and motor vehicle. You cannot claim additional depreciation on these assets. Rate of additional depreciation is 20% or 10% if used less than 180 days, then 10%. Purchase and put to you both must be executed in the same previous year. Only in that case, additional depreciation can be claimed. And if it is used less than 180 days in a previous year, then 10% can be claimed in that year and balance 10% could be claimed in the next year. Section 35 AD talks about specified businesses. So those specified businesses in which you have incurred expenditure, whether it's revenue or capital, all allowed in the year of commencement of business except the goodwill, land and investment. So here are the businesses for which you can claim these deductions. Now the special provision regarding sale of scientific research asset and section 35 AD asset. We will discuss them later. So those were the basic provision related with a PGBP question, what we just discussed with the help of these chart. Now one by one we are going to solve the MCQ and we are going to solve them. So I will present an MCQ, you will give me your answers and then we will see what is the correct answer and how we should drive to that answer. That is also important, that how we are going to drive on that question solution part. So these are the question. I already solved these questions for you. So that would be easy for us to solve it. Give me a minute. So here is question number 1. I want to see who is going to give me the correct answer. Let me see any query. Yes, we have one more session for PGBP after today's session. Anmol is asking, sir, if purchase in one previous year but put to use another previous year, then additional debt lapse. Yes, you are exactly correct. Additional debt could not be claimed. The purchase year and put to use year should be the same to claim the additional depreciation benefit. Exactly correct. So here is question number 1. Kindly read it carefully and give me the correct answer in the chat box. Very simple question at your level now, of course. Okay, so Anmol is saying D, Komalpreet is saying C, Abhishek Singh is saying C, Shoaib is saying C, Ajay is saying nil, Om Krishna is saying B, Swati is saying C, Satyapriya Nayak is saying B. Look, you are going to give examination in January 2025 and we are now at October. Today is 17th October. So technically we have almost half of the October and November and December. So you have almost 2.5 months left. And at this point of time, I would expect that these kind of simple questions you should solve correctly. So the question is very simple and we have just also revised the provision. So I would not expect wrong answer in these kind of easy question. The provision was saying if a machinery is purchased on 24th April 2023 but not put to use during the previous year, then at what rate depreciation will be provided on it? What was the provision? The provisions were saying that if any asset is purchased during the previous year, so our previous year is 23-24, then if it is two option not put to use, so the question led to this condition. If it is not put to use, then in the previous year, the debt would be 0. This was the provision what we have discussed. So the correct answer would be C and some of the students is giving the answer B or D. How it is possible? Kindly apply the provision and you would get the correct answer. तो अगर हमने मशीन 24 अप्रैल को खरीदी है उस साल पुट टू यूज नहीं हुई तो इसका मतलब हमारा कौन सा केस है? When asset purchased in the year and not put to use in that previous year. And if it is not put to use, then in that previous year debt rate is 0. And in subsequent put to year, we will see again If it is not put to use in subsequent year also, that would again remain 0%. And if it's put to use in subsequent year, then DAP rate would be full rate. Suppose in this case was 15, then that would be 15%. So in that case, in this question, it would be only C would be the correct answer. Okay, next. Now the question says, if a block of assets ceased to exist on the last day of the previous year, depreciation admissible for the block of asset will be, what would be the correct answer of question number 2? Take your time. It's my suggestion to all of you. In the examination also, I always say to the student that please take your time. Read the question. Reading of question is utmost important. अभी आप लोगों को एग्जाम से पहले क्वेश्चन पेपर मिलता है शायद, and you have time of like 15 minutes that you can go through the question paper. And let me tell you, that is the most important time for your examination purpose. Those 15 or 20 minutes if you are getting, those are very important. How to use that time, I will explain it to you. But how you should or what you should do in that 15 minutes, most of the student does not understand the importance of that time. I will tell you how to utilize that time. So back to our question, it says, if a block of assets cease to exist. So the concept says cease to exist. So means there is nothing has been left in the block on the last day of the previous year. So under income tax, we have to see the position on 31st March 2024 to claim the depreciation on the block of asset. So if there is block was exist for 364 days till 30th March, there was block. We have used the asset. But on 31st March, if the block does not exist, that we cannot claim the depreciation. We cannot claim the depreciation if the block does not exist on 31st March 24. So that would be a problem if the block does not exist on that date. So we will not claim the depreciation. Correct? So is it a loss or not technically? Think about it and give me the answer. So we would not be able to claim the depreciation even if we have used those assets for 364 days. So we would be at loss because we will not able to claim the depreciation. So is it exactly a loss? Or we can get the benefit of this thing somewhere else also? Think about this. Take the whole situation as per income tax perception from the income tax point of view. So is it a loss under PGBP or is it a loss as a person whole? Can we claim the benefit of this thing somewhere else if not under PGBP? Now think and tell me. So if the treatment is not under PGBP, we are not able to claim the depreciation, then where would be the treatment? There would be treatment somewhere, and that would be under capital gain. Under which section? Abhishek Singh is saying capital gain. Shoaib is saying capital gain. Yes, it would be in capital gain. Which section deals with it? Abhishek is saying section 50. Well done. Yes, section 50 deals with those cases in which block of assets cease to exist. So if you are not able to claim the depreciation in any case under PGBP, so automatically the treatment would be shifted to the capital gain. Okay, so there would be a problem in PGBP, but might be you are going to get the benefit of tax saving under capital gain. So the correct answer is of course A. Next. Now take your time and give me the correct answer to this question. Opening block WDV of the block of asset was 15 lakh. During the year, asset was acquired under this block on 24th October 23, amounting to 10 lakh. Rate of depreciation of the block is 15%. Calculate the amount of depreciation available during the previous year for the block. Take your time, but please solve it correctly. Okay, somebody is saying B. Satya Gupta is saying B. He's saying 3,75,000. Anyone else? Okay, somebody is saying B. Sai Kiran Kumar. I want the answer. Why are you sending me the provisions? What option is the correct option? You have to solve it, of course. Okay, Abhishek is saying D. Okay, Anmol is saying D. The correct answer would be C. Again, I was saying examination is so close and you are doing mistakes in solving so simple questions. So opening WDV has been given 15 lakh. During the year asset was acquired on 24th October 2023. So if the asset has been acquired on 24th October, so the day left till 31st March is less than 180 days. So that asset value is 10 lakh rupees and it is less than 180 days. Clear? Now, rate of depreciation of the block is 15%. So we will claim the full rate of depreciation on 15 lakh. That would come 2,25,000. And we will claim half rate of depreciation on this 10 lakh rupees value. That would come 75,000. So total would be 3 lakh rupees. If in the question it has not been given, then when it's put to use, then the date of purchase is equivalent to the date of put to use. So if the question is silent, then we have to take the assumption. It will be in the examination also, if there is something which is silent, then you have to take some assumption, and assumption needs to be always positive assumption. So if you will take an assumption that because in the question the date of put to use is not given, so I will not consider this asset. So that is an assumption which is called negative assumption. Negative assumption means exemption in that way, so you would ignore the solution part. So in that situation, you could not do this. So whenever their question is silent, you always take those assumptions on behalf of which we can solve that question in detail, more detail. So if the question is silent, always take the date of purchase at date of put to use. Generally and practically it happens. When you bring some asset into the business, you put to use it. So question is silent, that means you will take a positive assumption, and positive assumption would be that the date of purchase and the date of sale would be the same. Clear? चलो इस एग्जाम्पल में चेंज कर देते हैं. Suppose new asset has been sold for 11 lakh rupees on 30th March 2024. Suppose new asset has been sold for 11 lakh rupees on 30th March 24. Now calculate depreciation. Chalo. What should be the answer? Now write it down your answer. Swati is saying, sir, any asset purchase after. Okay, somebody is saying D. Bachcho, take your time. Why are you so in hurry to give me the answer? At least try to solve it. As the provision what we have discussed in the classes, you are not applying the questions answer. You are giving somebody saying 2,25,000, absolutely wrong. Satya Gupta is saying 2,25,000. So I guess you are not applying the provision correctly. Kindly take your time, have a pen, paper and calculator with yourself. Then read the question, apply the provision. I'm not going anywhere, but I just wanted that you should apply the provision correctly so we would be able to solve the question correctly. Abhishek Singh is saying 2,10,000. Satya-Priya Naik. And I believe you must know the answer. It's just that you are in some hurry, you are in some rush, and you just want to give the answer without applying the provision, without applying the calculator and pen paper. So it might be that you are reaching at the wrong answer, and that is dangerous. Don't do this. Okay. Now, what will happen? So you can see. In that situation, the question will be, will solve like this, that opening is 15 lakh, purchased new assets for rupees 10 lakh, which is less than 180. And the question specifically said that new asset has been sold for 11 lakh. So first of all, the sale consideration would be deducted from the new asset. Now because the asset value was 10 and the consideration was 11, so we can only less as the amount of consideration up to the amount of the cost. So we received 11 lakh, but we can deduct only 10 lakh from the value of the new asset. The remaining 1 lakh need to be deducted from the opening value. So remaining opening value is 14 lakh, and then 15% of this 14 lakh would be my depreciation. That would be 2,10,000. I have explained this in detail with so many examples in the live classes. That if the question is silent, then you will use the FIFO method. And if the question specifically tells which asset has been disposed of, then you have to deduct the value from that asset first, and the remaining would be deducted from the other values. Clear? Please take your time. Now, Sunil Kumar is saying 3,07,500. How it's possible 3,07,500? How you derived at that value? So please, you still have time. Kindly strong your provision, go through them, revise them again, and apply after. Give your answer after applying the provisions. Okay. Now, question number 4, it says opening WDV of the block of asset was 15 lakh. Okay. During the year, asset was acquired under this block on 15th November 2023. So before solving this, under this block on 15th November calculator. Without that, please do not give your answers, because in maximum case it would be wrong. Okay. So under this block on 15th November 2023, amounting to rupees 10 lakh. Asset purchased during previous year was sold for 15 lakh 50,000 on 21st February 24. Rate of depreciation of the block is 10%. Kindly calculate the depreciation. Please take your time and give me the answer. Okay, Ajay is saying A, Ayush is saying C, Komalpreet is saying A, Satya Gupta, Pooja is saying A, Swati is saying A, Arin Jain is saying A. Okay. Should we solve it? Okay. So now you can see opening WDV was 15 lakh. Correct? This information is here. We acquired new asset, and if the information not given, then we will assume that the put to use date is same as per purchase date. So it has been purchased a new asset for 10 lakh rupees. It is less than 180 days because purchased on 15th November 23. Now, asset purchased during previous year is sold for 15 lakh 50,000 on 21st February 24. So 15 lakh 50,000, but we could deduct only 10 lakh from this value. So this value would be nil. And the remaining 5 lakh 50,000 is going to be deducted from this value. So we will have only 9 lakh 50,000 remaining. And the DAP rate is 10%. Then why most of you are saying 47,500, 47,500? How it is possible? The correct answer would be 95,000. This is the wrong answer. So look, Pooja is saying A. How you are going to drive or you are reaching at that answers, I don't know. It's only one reason that you are not reading the provision, the question carefully. I believe that you all know the correct provision. You all know the answer. It's just that you are not applying the provision correctly. Please read the question. This is the basic first work to solve any problem in your life is to understand the problem. You cannot solve a problem without understanding the problem first. ये तो वही बात हुई. एक छोटी सी स्टोरी है. एक बच्चा था, सीए के एग्जाम की तैयारी कर रहा था. रिजल्ट आया, उसके दोस्त का भी रिजल्ट आया, दोस्त पास हो गया. दूसरे वाले दोस्त के घर गया तो घर के बाहर वो जो दूसरा दोस्त था वो जोर जोर से रो रहा था. इस दोस्त को लगा जो पास हो गया कि यार ये तो फेल हो गया है, इसको बहुत दुखी है, चलो इसे कंसोल करते हैं. उसके पास गया, बुला रहे, रो के होने वाली क्या बात है यार, हो जाता है, अगली बार फिर से हो जाए, टेंशन वाली क्या बात है, होता रहता है तो लाइफ में, कितने लोगों के साथ रोज होता है, तू क्यों इतना दुखी हो रहा है, एंजॉय कर. कोई मेला थोड़ा ना है 2 साल बाद आएगा, 6 महीने बाद क्वार्टरली आएगा, एक साल में 3 बार आता है, रोने वाली क्या बात. सो ही वॉज जस्ट गिविंग एडवाइस टू हिज फ्रेंड विदाउट अंडरस्टैंडिंग द प्रॉब्लम. जो दोस्त रो रहा था उसका रीजन था उसके घर में कोई कैजुअलिटी हुई थी. अब वो रो रहा था कैजुअलिटी की वजह से, और दोस्त क्या बोल रहा है उसको, अरे होता रहता है, इसमें रोने वाली क्या बात है, बार बार होता रहता है. तो जो दोस्त रो रहा था उसको और गुस्सा है, झगड़ा हो गया उसका अपने दोस्त से. तो जो दोस्त उसे सजेशन दे रहा था, ही वॉज नॉट रॉन्ग. ही वॉज ट्राइंग टू गिव द सोल्यूशन फॉर अ प्रॉब्लम which he would not understand. The problem was not why his friend was crying. वो रोने का रीजन उसके दोस्त का एग्जामिनेशन का रिजल्ट नहीं था, उसकी फैमिली की कैजुअलिटी थी. तो बिना उस प्रॉब्लम को समझे अपना सॉल्यूशन आपने लगा दिया. तो गलती क्या हुई? दोनों ही अपनी जगह सही है, बट फिर भी अगर देखा जाए प्रायोरिटी वाइज तो जो सॉल्यूशन दे रहा है उसकी पहला काम होता है प्रॉब्लम आइडेंटिफिकेशन करना. In management also there is a first step to solve any problem is identify the problem. If you're not able to understand or identify the question, to understand the question, how you will be able to solve that question? That is practically impossible in your personal life also or in your academic life also. Okay. Now Pooja is saying, Pooja, sir, asset is acquired less than 180 days, but that asset has been sold off. The question saying na This asset has been sold off. Okay. So out of this 10 lakh, this asset value has been zero now. So how could you apply 7.5% on opening value? This 9.5 lakh rupees value belongs to opening WDV or the new asset, Pooja? Chalo answer. This 9.5 lakh belongs to opening or new asset value? No, okay. Bolo, yes, sir. Which value is this belong? Old or new asset? Opening WDV? So opening WDV rate, how could be less than or 50%? It would be always full rate of depreciation. Now got it? Okay. Chalo bhai, next. Adu Limited owns machinery rate 15%. The WDV of which is as on 1st April 23 is 30 lakh. Due to fire, entire asset in the block were destroyed and the insurer paid 25 lakh rupees. So what is the eligible depreciation in respect of this machinery? Kindly answer. Anmol is saying D. Satya is saying okay. Abhishek is saying Pooja. What is the answer, Pooja? Tell me your answer. Deepika is saying C. Okay. I'm waiting for Pooja's answer. What is the answer, Pooja? D. Why? Why D? What reason? What reason answer is D? Satya Gupta is saying correct. Deepika, why or how it could be C? I am asking for depreciation and you are saying 5 lakh rupees. How, what is kind of answer is this? Correct. So you all know the provision. Pooja also know the provision. Now she's saying because the entire block has been deleted. Exactly correct. You all know the provisions. Then please apply them correctly. In my live classes, I was taking classes yesterday, residential status classes for, I guess, 2000 assessment year 25-26 batch I was teaching. And I've told them, and I'm also going to tell you this thing. Please एक बात ध्यान रखो सब लोग. बिल्कुल सही बात बता रहा हूँ. In our CA examination, we generally failed not due to those questions for which we do not know the answer, but we generally fail because we solve those questions incorrectly, which we already have practiced. Those questions we solved incorrectly, those provision we have exactly learned correctly. So please in the examination, believe me, CA में हमेशा ध्यान रखो जो क्वेश्चंस जो प्रोविजन ढंग से आपको आते हैं उनको गलत मत सॉल्व करके आना. It might be in examination you might not know the 15 marks paper, you might be those questions you don't know how to solve it. So it does not matter, it depends the part of question, those questions you have already know the provision correctly, you have already practiced those kind of question correctly from RTP, MTP or your study material. Even if that kind of question is coming into an examination and if you are solving those question incorrectly, that would be a problem. So exactly this is my suggestion to all of you. Kindly do not solve those questions incorrectly in your examination. What you have already practiced in your study from your study material, RTP, MTP, and the provision of those questions, you learn properly. So don't do this mistake in rush or due to nervousness or other reasons. Fine. So of course we have discussed that to claim the depreciation, there should be asset as well as value must exist in the block. Now the question says there is only a one machinery. The value was opening 30 lakh. Now it has been discarded, and that is the money received against those assets would be deducted. So even after receiving 25 lakh, we have value exit in the block. Yes. But does any asset exit in the block? The answer is no, because there was only one asset and it has been destroyed. So value exit, but no asset has been there. So depreciation cannot be claimed. For the purpose of depreciation, we need value as well as asset, both in the block of asset. Clear? Next. Okay, read yourself and give me the answer. So what would be the correct answer? Abhishek is saying D. Okay. Anyone else? Karnesh is saying D. Well done. And Mole is also saying D. The correct answer of this question is exactly D. Because the provision says that Swan Private Limited acquired machinery for 5,75,000, including GST of 75,000. And this GST is not eligible for GST credit. The provision says if you are paying GST on purchase of any asset, then if the credit is available, then that GST would not form part of the cost of the asset for the purpose of depreciation. But this GST was not eligible for GST credit, so this 75,000 would remain the part of the asset. And custom duty 50,000 for which credit available. So out of this 5,75,000, the credit available is 50,000. So that would be deducted from the value of the asset for finding out the depreciation. So it would be remaining 5,25,000. Now the company borrowed some loan also from a bank. Interest on bank loan up to the date of use of machine was ascertaining 25,000. So any expenditure up to the put to use should form part of your cost of the asset. So that will come 5,50,000. Now machine has been put to use on 15th November 2023. So half rate of depreciation would allowed, and that would be 4,1250. Correct. Well done. Next is a company incurred capital expenditure. Now this is very, very simple. On scientific research, land 5 lakh, building 10 lakh, equipment 7 lakh rupees. So what would be the expenditure eligible for deduction under section 35? The correct answer will be, of course, we all know that would be B. Because the value of land cannot be considered for the purpose of deduction. So that would be building value and equipment value. That is going to be claimed as deduction. The next one, kindly read the question and then give me the answer, then we will solve it. And we have to also calculate additional depreciation in this case. So try to solve yourself, then I will solve in detail for all of you. Okay, somebody is saying the correct answer is B. Okay, who is saying it? Swati is saying B. Satyapriya is saying B. Karnesh is saying B. Satya Gupta is saying B. Well done. Very well done. Yes, the correct answer is B. How we find it out? Let's solve this. So now the question says that XYZ Limited is engaged in production of textile articles. That is a manufacturing unit, so it can claim additional depreciation. The opening WDV has been given 15 lakh. During the year, plant was acquired under this block on 15 December 23, amounting to rupees 10 lakh. So new asset has been purchased for 10 lakh rupees. Less than 180. One of the assets falling within the block was sold for 550 on 14 January 2024. Now the question is silent that which asset has been transferred. So we will apply the FIFO method. That means the subtraction would be from the opening value. So now the opening value left 9,50,000 and new asset value has been with us 10 lakh rupees. The normal depreciation is 15% on this value. And for this value, the normal depreciation rate would be 7.5%. For additional DAP concept, we cannot claim additional DAP on opening WTV. There must be a new asset purchased and put to use in the same year. That should not be a ship and motor vehicle, etc. So this asset has fulfilling all the deduction, all the condition for claiming additional debt. And because it's less than 180 days, so it would be 10% additional depreciation. So 15% of 9,50,000, 7.5% of 10 lakh rupees and 10% of 10 lakh. The aggregate of which would be 317,500. So that would be the correct answer. Next. Mr. Ramesh, Ayushi is saying, sir, 5.5 lakh will not get deducted from 10. Of course not. Because if in the question it has been specifically stated that this 5,50,000 has been for the new asset purchased has been sold, then only we can deduct it from the new asset value. But if the question is silent about which asset has been sold, then we will always apply FIFO method. So that means from the opening WDV, we need to deduct it. In the other question, you might have seen that specifically it has been given that which asset has been purchased and sold. Like in question number 4, it has been written directly. Asset purchased during the previous year was sold for 15,50,000. So we deduct that value from the new asset and then from the opening WDV. But in question number 8, the question is silent that which asset has been sold. So we always take sale value should be subtract from the FIFO method and it would be deducted from the opening WDV always. Sunil is saying additional depreciation is always 10%. No, additional dep rate is 20%, Sunil. But if the asset which has been used for less than 180 days, then additional dep rate also would be half of the normal rate. That would be 10%. Now question number 9. Again, very simple. After these MCQ 9th and 10th, we will go for a short break, of course. So Mr. Ramesh during the previous year 23-24 made royalty payment outside India to a non-resident on which TDS was not paid. So the payment has been made to a non-resident, okay? And the payment belongs to royalty on which TDS was not paid up to due date of TDS in section 200. However, such TDS was deducted and paid on 15th February 2024. When shall deduction of this expenditure be allowed to the assessee? So Anmol is saying B, Shoaib is saying C, Sai Karan is saying B, Swati is saying B, Ayushi is saying C, Pooja is saying B, Karnesh is saying D. So somebody said B, someone said C, somebody is saying D. Nobody is saying A. Why? A भी बोल दो. A को कोई छोड़ा बच्चों. A भी बोल दो कोई आंसर. एक की तो how it's possible that you are giving somebody is saying still Karmesh is saying D, Sunil is saying B, Satyapriya is saying C, B, C, D. Okay. What was the provision? The provision was like this: if payment made to a non-resident. Okay. So either it would be a payment for salary or it would be for other payment. For salary, the concept says that TDS on that salary should be deducted and deposited up to due date of TDS. So if it is done, you can claim the deduction. If it is not done, the deduction would be lapse. But our question is related to royalty payment. So that falls under other category. For the other payment, the provision says if TDS is deducted and deposited up to due date of ROI, then deduction would be in same previous year. And if not, then in the year of deducted and deposited. So our previous year 23-24 ROI date of Mr. Ramesh either would be 31st July or 31st of October 24. And TDS has been deposited upon 15th February. That means before these dates. So reduction would be allowed in the same previous year. The correct answer would be B in the previous year 23-24. Next. Now the partnership, very interesting question. And partnership provisions, okay, both are for partnership firm. And I would like to solve partnership question number 10 and 11. After discussing with you with partnership provision first, because I have seen that some students is still confused about the partnership firm provisions. At some time they need to add the salary. At some point of time, we do not need to add the salary in the question. So might be there is some confusion in the minds of students for the purpose of partnership firm provision. So we will discuss question number 10 and 11 of MCQ after the break, when we will once revise the provision regarding partnership firm. Komal Preet is asking, sir, in the question, if salary is paid instead of royalty, then deduction not allowed. Correct. If in this example of what we have discussed, 9 number question, if the amount is not royalty but salary payment to non-resident, if it is not been deposited up to due date of TDS, then deduction would be lapse forever. You cannot claim it. Okay. So Mr. Bhargav, we are going for a 10-minute break. And student, when we will resume, we will start Okay. So welcome back, everyone. We were discussing provision for PGBP revisionary classes, and now we will discuss the provision for partnership firm. Because in my opinion, partnership firm have some extra uh, provisions which makes it more complicated and from an examiner point of view more interesting to frame question from that partnership chapter. So what exactly we needs to do in case of partnership firm provisions? First of all, understand what we need to find out, and then the depend upon what kind of question we in the examination, so we can follow this process to find out the real profit, book profit, and net profit in case of a partnership firm question. So in case of partnership firm, the difference is only this: two extra deduction has been allowed. One is interest to partner, and the second one is salary to partner. Interest to partner is allowed at the rate 12%. Any excess will be disallowed. So if interest is more than 12%, whether it's on capital or loan, the excess would be disallowed. Up to 12% is allowed. And salary to partner is allowed up to maximum as per income tax or as per accounting provision, whichever is lower. So salary would be allowed up to this limit, as per maximum allowed as per income tax or accounting provision, whichever is lower. Now, salary is allowed as per income tax depending upon the book profit. So first of all, the first step in a solution of a partnership firm question is to identify the book profit. Now, how we drive to book profit, that is important. Now, suppose this is a trading in profit and loss account of a partnership firm as per accounting provision. Its sale, closing stock has been given over it, then opening stock, then purchase, then other expenses. Now, salary to interest, salary to partners, A and B, and interest to partner, A and B. And now the net profit. So now to find out the book profit, we need to take this net profit and find out the net profit as per income tax provision, allowed expenditure, disallowed expenditure, etc. And the important thing is the treatment of these two items. So whatever salary has been given in the question, that is as per accounting provision, we need to add back 100% salary to partners, and we add back more than 12% interest to partners. After applying all addition, allowed, disallowed as per income tax provision, and the treatment of these two things, full salary should be disallowed, which has been given under trading in profit and loss account as per accounting provision, need to be disallowed, and interest only, that part needs to be disallowed, which is in excess of 12%. And after that, we will have our book profit. So book profit means this calculation. So if what net profit we have taken for calculation of book profit, if salary and interest already has been deducted. Now this is the tricky part. If the question says that the net profit suppose is 10 lakh rupees, and it says salary and interest to partner has already been deducted, has been deducted or debited or allowed, etc. Then we need to follow this concept. We have to add back the salary 100% which is allowed to the partner, and the interest portion which is in excess of 12% needs to be add back only. If that has been written, that net profit has been arrived after deduction of salary and interest, if it has been given in the question. But in some question, what the examiner can do, now he can say the net profit is rupees 10 lakh before allowing interest and salary to partner. Now suppose interest is given in question 15% equivalent to 1,50,000 suppose, and salary to partner is 4 lakh rupees. And now we need to find out the book profit. So we should understand how to arrive at the book profit, that if the salary to partners have been allowed, then we need to, you can see, if the salary and interest already been deducted from this profit, then to arrive book profit, we have to add back the full salary and interest which is exceeding 12%. Suppose in the same question, the interest was 15%, 150, and salary was 4 lakh. Already allowed before arriving is 10 lakh rupees. So in that case, we need to add back salary 4 lakh rupees and interest only 3%, which would be 30,000. So that would be our book profit, that is 14 lakh and 30,000 rupees. If it has been written that salary and interest had already been allowed. But suppose the question says that net profit is before allowing interest and salary, then how to arrive at the book profit? So in that case, we need not to add back this salary. There is no need to add back this salary because we did not allow it. Why we add back this salary over here? Because already it has been deducted, so we have to nullify that effect. So we have to add back. So if I'll add back it again, then I have to deduct it. So there is no need of doing this thing. So if the salary to partner have not been deducted, then either you can do this thing, you need to add it back, and then you need to allow it also. So that would be nullify that effect. Okay. Or you can ignore it. And what we need to do about this, we can only claim up to 12% interest. That is, you have to deduct 1,20,000 directly. Then we will have our book profit. In this case, it would be 11,20,000. So read the question carefully. If the question says that interest and salary to partner has been allowed already, then you have to add back the partner salary and the interest which is in excess of 12%. Okay, this rule should be followed. And if the question says that net profit is before allowing interest and salary to partner, then up to 12% salary you need to deduct, 12% of interest you need to deduct, and the salary part you need to add back and exactly disallow the same amount, or you can ignore it also. Both will have the same effect. Either do not do anything with this, or you need to add back as well as deduct it to show the process. So now we will solve the MCQ of partnership firm, and we have to find it out what kind of information has been given. And according to that, we will apply the provision. Okay. Correct, you are correct. It's 8,80,000. I just added back. 10 minus 120 should be 8,80,000. Satya Gupta, you are correct. Well done. Okay, moving on to the questions. Now question number 10. So first of all, you need to check whether the interest and salary has been deducted or not. So the question says, and once you will arrive at the book profit, then the concept is easy. We just did not discuss it over here. What will happen? What will happen after we arrive at the book profit? The provision says once you arrived at the book profit, then up to 3 lakh rupees, or in case of loss. So up to 3 lakh rupees of book profit, or in case of loss, 90% of book profit or 1,50,000, whichever is higher, would be claimed as a remuneration or salary to partner under income tax, and anything balance 60% would be taken. So that higher value plus 60%, whatever is coming over here, the total would be your maximum allowable salary as per income tax. So this salary, or as per accounting salary, the lower would be allowed as a deduction, and that lower would be deducted from book profit value. Whatever is your book profit, the lower will be deducted from over here, and you will get your answer as a net profit. We have already discussed this provision in detail in our normal live classes. So if any one of you have not watched them till now, and you have any issue in any provision what we are discussing today, you can go through those classes and you can watch in detail every provision, whether it's depreciation, additional depreciation, scientific research provision, TDS provision, this partnership firm provision, any provision, everything has been discussed in detail in those classes. So now moving on, the question from the MCQ sheet. So the book profit of a partnership firm is already been given in the question. That's a good news. It's 1,20,000 rupees. The actual remuneration paid to working partner is 3,54,000. The allowable deduction under section 40B towards remuneration to all partner is. So what could be the correct answer? Because in the question book profit has been given 1,20,000. So the provision says either it could be 90% of book profit or 1.5 lakh, whichever is higher. So in this case, the higher would be 1,50,000. That 1,50,000 or actual remuneration was 354. Lower would be allowed. So the correct answer would be 1,50,000. All of you have given the correct answer. Very well done. Now this is a question. It's very interesting. A partnership firm has net profit of 6,20,000. Now read it carefully what it says before. This is word is very important. Before deducting interest on capital to partners at the rate 15%, which is 1,50,000, and working partner salary of 1,80,000. You need to calculate the total income of the firm chargeable to tax. What should be the correct answer? Now the question says, you can see that this is before. So that means this is a profit out of which we did not deduct the salary to partner or the interest. So we will follow either this method that we should add back the salary 180 first and then deduct it also. You can follow that or you can ignore it also. And we have to deduct only up to 12%. That means 1,20,000 from here for interest up to 12%. So my book profit would be how much? The book profit would be 5 lakh rupees. Now, on the basis of this book profit, if I'm going to find out the remuneration, so it will say up to 3 lakh rupees, or in case of loss, it would be 90% of this profit, that means 2,70,000, or 1,50,000, which is a fixed limit. So the higher would be, remember it's higher. Generally, we took lower in case of allowability of expenditure in all cases almost. But in this case, they are allowing the higher, that is 270. And the remaining is 2 lakh, 60% of 2 lakh, 1,20,000 would be the other salary part. So that would be 3,90,000 as per income tax, or as per accounting, it was 1,80,000. So lower would be allowed as deduction. So lower would be deducted from here. So remaining 3,20,000 would be of course, net profit as per income tax. The correct option is B. Very good to see that almost all of you has given the correct answer. So please check this word. Okay, now what if I'll say this? A partnership from the net profit, if I've changed it now like this. After deducting interest on capital to partner 15% and working partner salary 1,80,000. Now find it out, the book profit and the final net profit. Now solve this. So if I have changed the question that this 620 is after deducting interest on capital. So now in this case, we have to find the net profit. Net profit has been given over here 6,20,000 as per accounting provision. And we have to arrive at the book profit. So for the purpose of book profit, now I have to just add the disallowed part of interest. That would be 30,000. And I also need to add the salary paid to partners, full salary paid to partners, because we have already deducted it. So that would be 1,80,000. So now my book profit would be this 650 plus 180. So this is 830 my book profit. Now, if my book profit is 8,30,000, then up to first 3 lakh, 270 or 150, whichever is higher. So that would be higher. Balance 530, 60% would be taken. That is 3,18,000. So 318 plus 270, maximum allowable remuneration would be 5,88,000 or 1,80,000 as per accounting provision. Lower would be allowed. So lower would be 1,80,000. So our answer would be, net profit would be 6,50,000. So we have seen that if what provision will be changed, if the net profit has been given before allowing these deduction or after claiming these deduction of interest and salary. So please give your full attention when you are going to solve a question of partnership firm, that what kind of net profit has been given in the question. Okay, B. Sai Kiran is saying, as per Finance Act 24, there is TDS provision on salary paid to partners by partnership firm. So Finance Act 2024 is applicable for assessment year. For financial year 25-26, this is not applicable for your attempt. Okay. Next is, okay, so we have done with our MCQ. Now let me share with you suggested question paper. Where it is? Suggested. This is the last attempt question number 1, what we are discussing. A very interesting question also. So in this question, that is for May 2024 examination question. For how much marks it was? It was for 15 marks. Okay. So I've told you that generally the first question, the compulsory question generally rated with the PGBP question. So in this question, we have to calculate the requirement was to calculate compute the total income. You can see that the total income and the tax liability of Mr. Sahil for assessment year 24-25. If he has exercised the option of shifting out of the default tax regime provided under section 115 BAC 1A. So the provision says you have to find out the tax liability and total income also. So the provision of PGBP, capital gain, deduction, set off, tax liability, everything has been incorporated in this question. But we are going to solve only the PGBP part. We're going to see that what answer or how to drive the correct answer of our PGBP part. Clear? So let me open this question in other laptop. Then we will solve this question, each point one by one. Before solving it in that way, let's discuss the main points of this question over here. So the question is, Mr. Sahil, resident India, at 40 year, a manufacturer at Chennai gives the following manufacturing, trading and profit and loss account for the year 31st March 2024. Now the question says, manufacturing and trading and profit and loss account has been given in the question. We have given the sale, closing stock, opening stock. How we will start a PGBP question? We always take the net profit which has been given in the question. That is 13 lakh and 56,000 rupees. 13 lakh 56,000 rupees. Let me solve over here. This is the more places over here. 13 lakh 56,000 rupees. So that is the net profit which has been given in the question. It has been given over here. So I have taken this net profit and then one by one we will solve this question. So from this 13 lakh 56,000 rupees, sale is the part of PGBP. So we are not going to do any treatment with this value, not with the closing stock. First of all, always solve the credit side. And it's really easy to solve the credit side because we just need to subtract those income which do fall in some other head of income. We know what kind of income fall in the PGBP head. So all other income does not form part of PGBP head will need to be subtract from this net profit. Like dividend from domestic company, it's a part of income from other source. So I will subtract it from there. 15,000, clear? Then the second income is lottery net of TDS. So lottery income, of course, a part of casual income need to be subtracted. Profit on sale of share, that is a part of capital gain, 45,000. This is also going to be subtracted from my profit. So I'm going to subtract this lottery income, that is also 10,500. Net of TDS has been given. So we will gross it up when we will solve the income from other source provision. That would be grossed up at that point of time. No need to gross it up right now because we have already only received 10,500 in PGBP. So only need to subtract that part. And that capital gain part, that was 45,000, we need to subtract. So credit side has been solved. Section 28 provision we applied that what income should form part of PGBP head and the other those are not form part of PGBP head, we just removed that. Okay. Now opening stock, of course, not an issue. It's a part of our PGBP. Purchase of raw material, it's a part of PGBP. Manufacturing, wages, etc. Not an issue. Administrative charges, not an issue. It's okay. SGST penalty paid. It is not compensatory nature. So it will not get back. So that is going to be add back. Other provision, GST paid, not an issue. It's okay. General expenses, okay. Miscellaneous expenditure, part of business. Loss on sale of share, going to be add back. Interest to bank on machinery term loan, that's a part of my business, of course, not an issue. Depreciation is need to be added back because this is as per accounting provision. So I will add this depreciation and we will find the income tax depreciation and that is going to be subtracted. So that P&L part already been solved. So I need to add back certain expenditure. Penalty of SGST 7,000, loss on share was 20,000. Then depreciation was 2 lakh rupees. You can see it's a 15 marks question, and I believe almost 60% or 50 to 60%, like almost 8 marks or between 9 marks, belongs to that PGBP calculation. It's too easy that you can claim, you can gain almost all that 7, 8 or 9 marks from that PGBP income part. So we have solved the trading and P&L part. Now we are coming on the additional information provisions. So provision says administrative charges includes 46,000 paid as commission to brother of assessing. The commission amount at the market rate is 36,000. So where is our chat box? I guess chat box. Yes. So now you need to tell me what to do with this provision. The first point, the adjustment. This adjustment need to be solved. So administrative charges include 46,000 paid as commission to brother of assessee. The commission amount at the market rate was 36,000. So what do I need to do? Should I add it back? Should I not add it back or should I ignore it completely? So because we have seen in the provision that if any expenditure made to a specified person, to your relative, etc., and if it is exceeding the market value, so the excess is going to be add back. Exactly, all are giving the correct answer. Well done. So this 10,000 need to be add back because the market expenditure was 36,000. Payment to specified person, the excess amount, the difference is 10,000 needs to be add back. Well done, students. Second, the assessee paid 33,000 in cash to a transport courier on 26 December 23. This amount is including in manufacturing expenditure. Assume that the provision relating to TDS are not applicable on this payment. Look, Institute is so generous. Look, he's so much concerned for you that these kind of complication they are actually removing. That do not think about the TDS concept in this provision, just solve it with the given information. So what should I do with this expenditure? We have paid 33,000 in cash. So is this going to be allowed? or disallowed, or there should be some other treatment of this amount? Well done. Yes, we have discussed that provision also, that amount disallowed under certain circumstances. So the provision was, if you pay to a same person more than 10,000, same day, same person, it is disallowed. But this limit is 35,000 if you are paying it to a transporter. So you can see question itself going to give you the hint. It's a transporter. Do not disallow me, because for me the limit is 35,000. So we are not going to do anything with this information. It looks like a complicated question, because when you are in examination hall, you might be seeing that it's a two-page question. So it's a very difficult, and due to nervousness, you might be going to solve it wrongly. But if you will keep yourself calm, apply the provision correctly, control your nerves, then it's not a difficult question. Very easy question. Okay. A sum of 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of account. Now, institute is really generous, let me tell you. Now, this kind of question also has been given in your study material. This kind of point already has been given, maybe in illustration or maybe in your test your knowledge question. Exactly same point has been given. And there's a treatment in your study material, and the treatment says that this should be treated as your black money. This should be treated as your black money because this is called an unexplained expenditure. In the study material, it has been given that it should be treated as your black money, unexplained expenditure. So it would be add back 48,000. So it has been given in the study material. But there is also one more view regarding this expenditure, because it has not been clearly stated that you intentionally hide this expenditure. It is not recorded. The not recorded may be having two outcomes, whether it's intentional, whether it's a mistake, omission. So if it is an omission, then we could deduct it from the profit, because we have forget to return it. So now we are actually claiming this expenditure. So my profit would be reduced because it has not been recorded. Now, if I'm going to record it, then my profit would be reduced. And if we assume it as a black money, unexplained expenditure, then we have to add it back. So both condition has been given over here. And in the solution also, institute accept both answers. Don't worry, Sunil asking what to do in this type of question. In the suggested answer, institute accept both kind of your view. Those students added it back, institute accept that, and those students subtracted, institute has also accepted that. So both are correct as per the suggested answer. So do not worry, institute is with you. You just need to work hard, etc. And institute is with you in every way. Okay. Now, bank term loan interest actually paid up to 31st March 24 was 20,000, and the balance was paid in October 2024. So the provision says, because the bank interest 20,000 has been paid and the balance has been paid. Just a second. Question नहीं दिख रहा. The bank term loan interest actually paid up to 31st March 24 was 20,000. The balance was paid in 2000 October 24. So total bank interest was 60,000. It was 60,000 as given in the question. Out of that 60,000, you have paid 20,000 up to 31st March and balance in October 2024. So section 43B says, in case of bank interest, it should be paid up to due date of ROI. So either the due date would be 31st of July or it would be 31st of October. How you will identify it? Because in this case, the turnover is not exceeding 1 CR or 2 CR. So associate does not fall in the audit case. So if it is not a part of audit case, so the due date would be 31st July and it has been paid after July. So This 40,000, except this 20,000, the balance 40,000 is going to be disallowed. Okay. Now, miscellaneous expenditure includes 10,000 contributed to Prime Minister Relief Fund. You can claim a deduction for this under Section 80G, but you cannot claim it as a business expenditure under P&L. So it's going to be disallowed also. Loss on sale of share represent, that is for capital gain information. Profit on sale of share is for again capital gain. Housing loan principal amount paid, etc. is for house property income details given. Okay, now it is for the depreciation. We have add back the depreciation which has been given 2 lakh rupees because that is as per the accounting provision. Clear? Now, as for income tax, we have to calculate the depreciation as follows. It says opening WDV 12 lakh rupees. Addition during the year used for more than 180 days. So more than 180 days asset value has been given 2 lakh rupees. Total addition during the year 4 lakhs. So how much I should add over here? Tell me. Correct. Total is 4 lakh. Out of this 4 lakh, 2 lakh has been for more than 180 days. So balance should be less than 180 days, and that is also equivalent to 2 lakh rupees. On this 14 lakh, we will claim the 15% DAP rate, and this 2 lakh would go for 7.5% DAP rate. So my total depreciation would be 2,25,000. This is going to be subtract. So if you will solve this question, your profit would be either your net profit would be 13,95,500. If you add back that 48,000, that 48,000 if treated as unexplained expenditure, then your answer would be this. But if it would have been allowed as a expenditure, if we consider that as an error, then your answer would be 1299500. Both answer has been considered by the institute. Let me show you. It has been written over in the solution also. This is the both condition has been written over here. If you add it, the answer would be different. If you do not add it, it would be the answer would be different. So this answer would be after setting off of 2 lakh rupees house property loss. I did not set it off because we just need to find out the PGBP income yet. So after setting off 2 lakh, it is 1099. Otherwise, it would be 1299. So this is 1299,500. When we claim that expenditure as a expense, and if we disallowed that, in that case, after 2 lakh rupees, before set off, the answer would be 13,95,500 rupees. Clear? B Sai Karan Sai, when we are computing tax liability means ITRs not filed. You can understand that, but we need to find out the date of ITR filing. So what would be the last date of filing of ITR? That is more important. The day actually you filed or not, that is not important. So in this case, because the assessee's turnover is less than 1 CR, the profit declared by him is more than 8%, etc. So he does not fall in the case of tax audit. So we consider the date of 31st of July in this case. I hope it's clear. So that was the question from the last attempt, like May 2024. And you can see that we arrived at the net profit very easily. Some addition, subtraction, this is the examination level question. So you can see that that is an examination level question and it can be solved that easily. So, okay, I am telling it for unexplained income. Look, unexplained income having different tax rate, different procedure. Okay, so we are not going to discuss. It depends upon case to case basis. Okay, now I have a question for partnership firm also. Give me a minute. So we will solve that question of partnership firm. Where are my notes? Just give me a second. Okay, that is MTP. Answer. MTP series. This is our MTP question number 3B, what we are going to solve. Messrs. Ravi and Sons are partnership firm consisting of two partners. Reports are net profit of 7,50,000. Read it carefully. Before deduction of the following items. Before. So net profit has been given in the question before allowing the following deduction. Let me see what kind of deductions. 25,000 each per month payable to two working partners of the firm. So that means 3 lakh rupees for each. So that means total 6 lakh rupees. Now you have an option, either ignore this provision or you need to add back it and then need to deduct it also, as you decide. Okay. Depreciation on plant and machinery under section 32. As per income tax, the depreciation has been given is 2,50,000. So I need to subtract it. Interest on capital, that is 15% per annum as per the deed of partnership. That amount of capital eligible for interest is 6 lakh rupees. So 6 lakh is equivalent to 15%. So we have to add back 3%. Only the disallowed portion that would come. Okay, we need to allow, sorry, 12% of it because we are before allowing. We need not to disallow it, we need to allow it. So we need to subtract 12% of it. So 6 lakh 12% is 72,000 we need to deduct. The amount eligible. So now we are over here. So now we can calculate the book profit, and then book profit would be 4,20,000. Any confusion? So book profit would be 4,28,000 in this case. Carry forward losses will be the implication related to chapter set off and carry forward. So now the book profit is 4,28,000. Kindly calculate the remuneration and tell me the correct answer of this question. What is the maximum allowable salary? Book profit is 4,28,000. Kindly calculate the maximum allowable salary and what should be the net profit. Maximum allowable salary as per income tax would be 3,46,800. Somebody is saying 3,78,000. So first 3 lakh rupees out of this 4,28,000. The allowable salary will be 270 or 1,50,000, whichever is higher. So that would be 270. Balance is 128. That is 76,800. Total is 346,800. This or 6 lakh, whichever is lower, is 3,46,800. So this is my allowable salary as per income tax, and now we need to deduct the lower. So after deducting it, my net profit would be 81,200 rupees. I hope it's clear. Very well done. Most of you have given the correct answer. Value added. So if there's any query in today's session, you can ask me. Then we will close our session for today and we will resume it day after tomorrow with more example, with more provision, and with more revisions. So if there's any query, kindly ask. Yes, P. Saikuran, please write down your query, or if you are not mute, then you can ask also. Kindly send your query. I guess all are muted. Write it down your query. Ms. Bhargav, we can, I guess, close the session. There is no SH query.